Hey guys, welcome to part 4 of structure. Alright, so in this video, I'll be going over the different phases of the market, right? Pretty much everything I taught previously, right, in the previous videos, but I will be showing you guys on the actual charts so you guys have a better understanding of what it looks like on the charts. Alright, so I'll be going over the different phases of the market, such as obviously the bullish trend, the bullish market, the bearish market, the consolidating market. I'll also be showing you guys breaks of structure, right? Where price shifts its direction after the break of structure and so on and so forth. I'll also be breaking down a section on Euro USD so I can show you guys how to intertwine the different time frames, right? So starting with the daily, the 4 hour, and yeah, right? So I want basically what I taught in the previous video about intertwining the different time frames. Obviously, that was done in diagrams. I want to actually show you on the charts so you guys can do it on your own and learn how the different time frames all actually work together. Okay? So let's get on with the video. All right, so going into the different phases of the market, number one being the bullish market, this is a great example of it. Okay, so some people actually might look at this as a consolidation, right? But I don't look at that as a consolidation. The market is actually printing higher highs and higher lows. Okay, so the way we know the market is bullish is by its higher highs and higher lows, which is indicated right here, right? So this is the low it started from, right? And then this is the high. This is the higher low, higher high, higher low, higher high, higher low, and so on and so forth. Okay, so this is an example of a bullish trend. Okay, as you can see, I didn't mark this low out. The reason I didn't mark this low is because after the higher high over here was printed and it pulled back, right? Price retraced into a discounted price. After it's reached that discounted price didn't break the high again, right? It respected it, went lower, right? And actually went lower than this low right here. And that's the reason why this right here is the higher low. The higher low is not confirmed until the previous high is broken. Okay? All right, going into the bearish market. The bearish market is known by its lower lows and lower highs. Okay, so over here, you can obviously see this is clearly in a downwards movement, right? So price is moving to the downside. All right, so it's in a downtrend. Obviously, you can see it visually, but to know that or to confirm that it's actually in a bearish state, you know it by its lower highs and lower lows. Okay, so this is the lower high, lower low, lower high, right? Lower low, lower high, lower low, lower high, lower low. All right, so this right here is an example of a bearish market. All right, so next we have the consolidating market. All right, so the consolidating market is known by price moving sideways. Okay, so this right here, you can see that price is currently moving sideways and has no apparent up or down trend. Okay, so price is around this area over here, does not break the low, just keeps moving sideways. Okay, so you'll actually see this a lot, as I mentioned before, right? It's when price is or the market is engineering liquidity to both sides. Okay, so liquidity is being engineered to both sides of the market. Obviously, you guys haven't got into the liquidity section, but once you do, you'll finally understand what I mean about this. Okay, so just know that the consolidating market is when the market is moving sideways. All right, no apparent up or down trends. All right, so next we're going to go into breaks of structure. Okay, so as I mentioned, a break of structure is when price breaks a lower high or a higher low and switches its direction, right? So right here is an example of price being bearish. Okay, so price is in a bearish state, right? This is an example of a bearish market right here. Price is currently bearish. And then what happens is price breaks above the lower high. Okay, so this is a high, this is a lower high, lower low, lower high, lower low, lower high, lower low. Okay, and then what happens is price breaks above the lower high, and once it breaks above the lower high, you'll see that price creates a higher high over here, pulls back, retraces, right? Doesn't break below the lower low, and creates a higher low over here. Okay, and then price goes up, breaks above this high again, and then creates a higher high, retraces, creates a higher low, and then another higher high, right? So this is an example of price switching its direction from bearish to bullish. Okay, all right, so next we'll be breaking down Euro USD. The point of this is so I can show you guys how to intertwine the different time frames, right? So starting with the daily time frame, which we're on right now, going down to the 4 hour, the 1 hour, the 15 minute, the 5 minute, and all the way down to possibly down to the 1 minute. All right, so let's get started with the daily time frame. Okay, so currently the market is bullish, right? You can see how do you know it's bullish? Well, because of the higher high, higher low, higher high, higher low, higher high, and then higher low, right? So because you know price is bullish, right? If price was currently over here, and you know that after creating or after pulling back, retracing, and creating that higher low or a low in the market, um, you can expect price being bullish again. Okay, taking out this high over here. All right, so if you go down to the 4 hour time frame, right here, you can see after price comes down and creates this low over here, what happens? You will see that, well, firstly, you'll see that price is bearish, right? So starting from the daily, when it has this pullback right here, okay, so starting from the daily, when price creates this higher high and decides to move down or retrace to create this higher low, you'll see that the daily or the 4 hour switches from bullish to bearish. This is the high on the daily. And leading up to that high, you can actually see price has structure. Okay, so high, higher high, higher low, higher high, higher low, right? Higher high. Okay, so let me actually change the colors on this. Let's make this blue. Okay, so this is the higher low, higher high, higher low, and then this is the daily higher high. And then what happens is price breaks this minor structure, which you'll learn later on, and then pulls back to the extreme and then decides to sell off, okay? Where it actually has the break of structure right here. So the break of structure happens right here, and then price does what? It decides to move bearish short term to come to this lower higher a higher low area on the daily. Okay, so to create this higher low on the daily, price breaks structure on the 4 hour and turns from bullish to bearish. All right, so what happens? Break of structure, right? This is the lower low, lower high, lower low, lower high. You can say lower low, lower high, lower low, lower high, lower. This is the higher low on the daily time frame. Okay, so how do you know it's a higher low? Well, actually, once price creates this low right here, you'll see that it had a BOS. Okay, a break of structure over here. And then what happens after the break of structure? Price comes, retraces, creates a higher low, right? And then break structure again, creating a higher high, right? And then a higher low, higher high, higher low, higher high, higher low, and then so on and so forth, okay? All right, so this is how you break down or basically intertwine the different time frames, right? I obviously did it on diagram format in the beginning. This is obviously how it looks like on the charts, right? So starting off with the daily, you want to build your direction on the daily, right? So obviously price is bullish on the daily, higher high, higher low, higher high, right? And then as I showed on the 4 hour time frame, break structure and starts moving bearish short term to create this daily higher low, right? And then breaks structure to the upside and continues the move with the daily, right? So that's how you intertwine the different time frames and look for entries, okay? So just because the daily, I mean, if the daily is up here right now and you're expecting a higher low to be printed, right? And you're meant to be trading pro trend, right? It doesn't mean you have to wait potentially, I mean, how long was this? This was 35 days, right? Doesn't mean you have to wait 35 days for a price to come into your area where you buy from. Okay, so the 4 hour break structure turns bearish. So once you understand it's short term, you can be selling alongside the 4 hour bearish move coming into this area where the higher low is printed, and then you can start taking longs with the daily structure. Okay? All right, so this is the end of the structure section of the course. In the next video, we'll get into the next section of the SMC course, but this is where we wrap up structure. What I want you all to do is basically look for the different phases in the market, right? A bullish market, a bearish market, a consolidating market. Look at different pairs like Euro USD, look at gold, right? XAU USD. Look at GBP JPY. Where there's a bunch of currency pairs that you guys can go on. I mainly trade Euro, so most of my analysis will be done on Euro. But I want you guys to basically look at different pairs. Look for the different phases in the market. I want you guys to also practice looking for breaks of structure, right? Where price switches from being bearish to bullish or from bullish to bearish. So you guys have a better understanding of how structure works. Anyways, I will see you guys in the next video.